Yo, what's going on, everybody? Man, we had some major outages today, hence why I'm on a little bit later than normal, but we got a lot of good stuff to cover. Obviously, I am going to talk about that outage and why decentralized solutions, I think, are going to be the answer. And I'm going to highlight some of those projects in the DePIN space that I think in the future are going to do pretty well, given these centralized entities having these massive outages that are incredibly costly. We're also going to be talking about why the market's down today. If you've been following my live streams, we've already talked about a lot of this. And this is why I cover the global news. I cover everything going on because it's all connected. We're going to kind of piece it all together, if you will. And we're going to talk about some crypto news, some DePIN news. Hivemapper, right after I announced their big customer announcement, they had an even bigger one come within 24 hours. So pretty wild stuff. All right, guys. Let's see. I do have a quote of the day real quick. I'm going to get that out of the way because that's important, man. I like doing the quote of the day. It's one act of small kindness can release an enormous chain of positive events. So I'm a big believer in putting out into the universe what you want to get back. Karma is a real thing. And, you taking a little bit of time out of your day, just giving even a compliment can make the biggest difference in someone else's life. And I'll tell you, the more you treat people like you want to be treated, the more that'll come back tenfold. So that is the quote of the day. All right. If anybody, I want to make sure I'm still getting a little bit of back feed from my mic. I tried cleaning out all my connections, everything. Not sure what's going on there, but hopefully I'm coming through loud and clear. Let's get into the news of the day. First and foremost, guys, this outage was massive. Okay, breaking the internet, exactly. We had Spotify, Google Cloud, AWS, Cloudflare, Gmail, YouTube, amongst many others, including StreamYard. That's why I couldn't stream earlier. Only Streamer TV was already live. Very soon, though. Very soon. We'll talk more about that. But huge outages, centralized entities. Aside from these outages, which are very costly, you also have censorship issues. You also have data leak issues. A lot of reasons why decentralized solutions, I think, can do quite well. The other big news of the day, this plane crash in India. Hold on here. Let me share my entire window. Also, by the way, I'm going to share some clips from Trump's address today. He covered quite a few things, and I've got a few different clips I want to play to you guys. To kind of piece together what's happening right now. But this crash in India, pretty wild. There are over 290 people killed. 242 of them were on board. There is one survivor in this plane crash, which is pretty crazy. Not only did he survive, he walked away from the accident, which is completely wild. I have no idea how that took place. I was like, what seat was this guy in? So it was 11A. So for those of you getting on your flights, maybe that's a seat. I bet that's going to be a seat that's purchased quite a bit now moving forward. Knowing the airlines, they'll probably start charging more for that seat. But pretty crazy stuff. Now, as far as what took place, there's a person that was on the flight right before that basically said that nothing on the flight was working. They're saying that their air conditioning wasn't working. Their crew call buttons weren't working. There's faulty reading lights. There are other reports that there had been concerns about faulty oxygen cylinders. And the airline was asked to ground the plane, but they kept operating it anyway. And aviation experts are saying this they're attributing it to a dual engine failure, which is a once in a billion flying hours event. So very, very rare. I imagine we'll hear more about what happened, but very sad event nonetheless. Also pretty wild that there's one survivor that walked away from that. That's pretty crazy. And then Boeing, man, had some rough times over the last few years. Obviously with the Middle East and some of those agreements to buy a bunch of Boeing jets, the stock had recovered, but pretty big drop today given this news, although I'm not sure that it was really their fault. I guess we'll find out more. All right. Maybe the airlines start charging subscription for the privilege using your seat. Oh, man. I wonder if that's a dig at Demo. Subscriptions. We're going to talk a little bit more about that today, too. Oh, yeah. I'm still digesting all of that. Got my thoughts on it. But there are a few clips from this I want to play because I think they are pertinent to everything going on right now. Otherwise, everybody doing? It's Thursday. That's a little chilly in Chicago, but it could be worse. Let's see here. Let's go to the tab. That way I get the volume shared. Here we go. All right. So starting with this one, let's see.
How close are you to step back between Ukraine and Russia? We see a very bad escalation. Are you going to leave it in the hands of the Europeans?
I'm very close to the situation. I'm very disappointed in Russia, but I'm disappointed in Ukraine also because I think deals could have been made. And, we're losing 5,000-6,000 people a week, soldiers mostly, but also people living in towns because they're getting hit by missiles again. How'd you like to live in a building and you think a missile has a good chance of hitting your building during the evening? It's horrible. Must be horrible to live like that. But, we'll get it, but it's, I'm disappointed that it's not done. We did great with India and Pakistan. We did very good with Israel. I thought, look, October 7th was a disaster. People forget, they like to forget. That was a horrible thing. But, none of these things would have happened if I were president. If I were president, none of it would have happened. You wouldn't have the Israel problem. Iran was broke. They had no money. We had big sanctions on them. Biden immediately let them get rich, $300 billion they have right now. But they had no money for Hamas or Hezbollah. They had no money for anything. It was perfect. We wouldn't have had inflation that was caused by oil, Chris. The oil price went through the roof. It was also caused by their spending, but it was caused more by oil than anything else. The oil went so high, got close to $100 a barrel. And that also kept the war going with Putin because at $100 a barrel, that was a big money-making experience. But now it's down to where it's not so good.
All right. So the main things, other than him talking about blaming the past administration for everything, whether or not we'd have these wars or not, like we have them, and he keeps talking about it, it's kind of annoying. But the main thing here is that it does not look like the Russia-Ukraine thing is going to be resolved in any short time period at this point. He doesn't sound super promising. The other thing he touched on here, though, and I want to talk more about this because I think it's really important with what we're seeing today, is oil prices. And for one, if oil prices go up, it does cause inflation. I'm going to show you some proof of that. But also, it helps Russia. Russia's economy is very, very reliant on oil. And when oil prices are high, Russia is stronger. So oil prices going up is not a good thing. And he talked about that, how it's helped Russia keep the war going when the oil prices were higher. When they're lower, it really hurts Russia quite a bit. The next part I wanted to play was about some of it, because we're seeing all these protests with the immigration. He talked about this briefly before, but quite a different stance on the deportations that are taking place. So I want to play this as well.
First, on immigration, what made you change your mind about targeting in California farmers and people in the hotel and leisure business?
Well, we're not targeting. In fact, if you look today, I put out a statement today about farmers. Our farmers are being hurt badly by, they have very good workers. They've worked for them for 20 years. They're not citizens, but they've turned out to be, great. And we're going to have to do something about that. We can't take farmers and take all their people and send them back because they don't have maybe what they're supposed to have, maybe not. And you know what's going to happen and what is happening? They get rid of some of the people because, you go into a farm and you look and people they've been there for 20, 25 years and they've worked great and the owner of the farm loves them and everything else. And then you're supposed to throw them out. And you know what happens? They end up hiring the people, the criminals that have come in, the murderers from prisons and everything else. So we're going to have an order on that pretty soon, I think. We can't do that to our farmers and leisure too, hotels. We're going to have to use a lot of common sense on that.
So in other words, yes, no shit. Yeah, we have a lot of people a lot of farmers, a lot of the restaurant industry hotel industry, where yes, there are undocumented people that are working, but they're working hard. They're actually paying taxes in many cases, and you can't just deport everyone. It would be really, really bad for the country. Now, I think most people are in agreement. It's like if someone's out there committing felonies, then I think most people believe that they should absolutely be deported. And I think if an American citizen was, committing felonies, then they should be in prison. So it looks like they are walking back a little bit of the rhetoric, and it should not be a surprise to anyone because, gosh, like if they just deported everyone, and there are reports that they're going out on farms and just grabbing people up, like obviously they're changing their tune a bit. So we'll see how that plays out. It looks like there's going to be an order signed on that. I don't know how they're going to oversee that, but definitely a change of tune. But the next thing has to do with Iran, guys. And we talked about this yesterday. And this is really important because a big part of the market pullback is because of what's happening with Iran and the tensions in the Middle East. And he was asked about it, and this is what he had to say.
About the Middle East. As the Israelis apparently gear up for some kind of an attack, a possible attack on Iran, are you trying to talk Netanyahu out of doing that? Or are you so against Iran having a nuclear weapon that you're okay, he does his thing because it is not an American war?
Yeah, it's a very fair question. Look, I want to have an agreement with Iran. We're fairly close to an agreement. We are fairly close to a pretty good agreement. It's got to be better than pretty good, though, but it's got to be, I'd much prefer an agreement. As long as I think there is an agreement, I don't want them going in because I think I would blow it. Might help it, actually, but it also could blow it. But we've had very good discussions with Iran. Whether or not we get there, I can't tell you, but it'll happen soon. I say this, Peter, very strongly. They can't have, whether it's going in or not going in, they can't have a nuclear weapon. I'd prefer the more friendly path.
So things are continuing to escalate. There are a lot of reports that Israel is going to be attacking Iran within the next 24 to 48 hours. A big part of this, obviously, in the negotiations is like, hey, yeah, Iran can have nuclear for energy purposes, but we don't want them to have nuclear weapons. Now, why is this all important? Aside from the fact that it could start a nuclear war. Obviously, that's important. This is all interconnected, guys. So there's a reason why, and we talk about this every day, is the global news and tensions can have a chain effect on all the markets. And what we're seeing right now is that anytime there's tensions in the Middle East, where 20 to 30% of the oil supply comes from, you see oil prices start to move upward. And that has a huge impact on a number of things. Now, let me share this real quick for you guys. Now, on the positive side of things, like there are some reports that they're supposed to have more talks on Sunday. Let's hope. But we're seeing this. JP Morgan is coming out and saying an attack on Iran could spike oil prices to $120. Again, 30 to 40% of our oil comes from the Middle East. If those supply chains are disrupted, it can spike prices in oil. That, they are saying, would drive U.S. CPI inflation of 5%. It's not good, okay? If we look at where prices are today, sitting at 68.37, so a far away from $1.20. But if you look at this, again, this is inflation, or CPI, how inflation is calculated, against crude oil prices. There is incredibly strong correlation, and it makes sense. We need oil for manufacturing. We need oil for shipping. Oil for the vast majority of the supply chain. The oil is included somewhere in that supply chain. But here's the problem, right? So if oil prices go up, inflation goes up, that means the Fed can't cut rates. And that's really bad for risk on assets. We've seen, the crypto market has basically led traditional finance, and that's because it's more risk on. The more risk on you are, higher interest rates impact you more, right? Risk on assets like crypto do really well in low interest rate environments. So as we see rates go up, that's really bad for crypto. And this is something we saw earlier this year where crypto got hit first, kind of front ran traditional markets because it's the most risk on. Now, I will say this much too, as rates drop, as people start to get more risk on with their investment strategy, crypto will or should, in theory, surge back faster than everything else. So you have the good and the bad that comes with being in a more risky industry and the volatility that comes with that. So this Iran situation is really important to keep an eye on. Like if we have full out war breakout, you better believe we're going to see oil prices spike up and you're going to see the markets take a hit. And that's what we're seeing today with crypto, especially. So that brings me to the next point, which is how many rate cuts can we expect this year? And this is something that Trump yesterday said he wanted to see a full percentage drop. Well, as of right now, it looks like the most likely scenario is that we'll see 2 rate cuts this year. You say, what are we on now? As far as rates? What do you mean? Let me know what you mean by that question. So 27% chance, the highest likelihood scenario is that we see 2 rate cuts this year. There's a 16% chance that we see 3 rate cuts this year. There's pretty much a 0% chance we see a rate cut next week, which a lot of people keep saying we're going to see that. I don't know where they're getting their information from. So I don't think it's going to happen. I believe September, unless we see some catastrophic events happen, September is the most likely scenario. Scott Bessent had some things to say about inflation. I'm going to play this for you guys too. Scott Bessent, we trust. He's not always perfect, but he's out of everyone, I think he's been the most trustworthy and kind of at least helped us navigate through all this nonsense that we've been seeing this year. Let me play this for you guys.
There seems to be a new version of TDS, which I would call tariff derangement syndrome. And many on your side seem disappointed that there is no inflation today. As a matter of fact, we saw the best inflation numbers since 2020. So there has been nothing passed on. There has been no tariff recession. So no inflation, no recession due to tariffs.
So I agree to an extent. Yes, we haven't had a recession yet. We haven't seen inflation from the tariffs yet. But how much of that is because companies are having to eat that cost, not by choice, but because they have to, because the consumer spending right now is so weak, they can't afford to pass all that on to the consumer. I'm sure they would love to, but I think that the economy is too weak for them to do so. So I think it's way too early to say that, hey, we put these tariffs in place, which, by the way, we have a pause on, and to say, oh, we haven't had a recession. Like, come on, man. Like, it's going to take time for these changes to go through. The question we want to answer, did Bessent give Elon the black eye? There are reports that they had a physical altercation over the Doge cuts, apparently, where Bessent was like, I mean, are any of these cuts real? You said you're going to come in, you're going to cut $1 trillion, blah, 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 blah. And I guess they got like a huge argument, physical exchange. Those are the reports at least. I don't know. Scott Bessent looks like he's a pretty big dude, but he doesn't look like someone that would punch somebody. So I don't know. maybe he's got an inner boxer in him. I don't know. I don't know. That's a funny question though. Bob always bringing the funny questions. Hey, make sure to like, by the way, and retweet if you haven't already, and subscribe if you're watching on YouTube. All right. The next thing I want to cover is this DXY charts, because US dollar is basically broken below basically a level that had been holding for the better part of like 3 years. So this, by the way, DXY is the strength of the US dollar against the 6 major foreign currencies. You got the euro, the Japanese yen, the British pound, Canadian dollar, this Swedish, I guess, krona, and the Swiss franc. So it's a measure of the US dollar and its strength against all the other major currencies in the world, and it is losing traction. Now, on one end, you have the problem that as the dollar weakens, well, we don't have as much buying power, right? So for imports, that makes things worse for us. Now, it could, in theory, help with exports. This is a big reason why you have like China purposely keeps their currency weaker than ours because they export to us. If we have more buying power, more purchasing power with our currency, that means they can export more goods to us. So, we're looking to export more. We're hoping to. So this actually can work in our favor to an extent. What's up, Julie? Hi, friends. Man, StreamYard was like being crazy earlier. We talked about it already, but there's some major outages today. Major outages, but we're here. We're still here. We're still alive and well. I covered yesterday how AI is taking jobs. I'm going to play a small clip from this. This is the ex-Google CEO. I thought this was worth pulling up here. Share the tab. Here you go.
1 year, the vast majority of, we believe as an industry, that in the next 1 year, the vast majority of programmers will be replaced by AI programmers. So,
guys, this is happening way faster than I think people realize. We saw that a bunch of the people working for the Google search team, because let's be real, search engines are like dead, guys. Like with AI, and now with AI agents coming up, like search engines are going to cease to exist. And now you've got coders, programmers. There's going to be a lot of jobs that are replaced. And I'm not saying that there's going to be no need for coders or programmers, but I'm saying like one of them will be able to do 10 people's jobs with AI assistance. And the amount of layoffs we're going to see in the coming years and unemployment ticking upward is going to be a major problem that we're going to be facing. We're going to have to see how we deal with that. People want answers, not links. Yeah. I want to play a clip from the Florida real estate markets. We're seeing with the way rates are and the way homes have appreciated, I think that we're due for a major correction in the real estate markets. We're seeing it in Florida. We're seeing it in Texas. A couple other markets that we're seeing it in. I think there's still this gap between the perceived value. People saw what houses have sold for the last 2 years, and they think they can still sell them for those prices versus what people are actually able to sell their homes for. And I thought this was an interesting video from this girl that is a realtor or real estate agent in Florida.
As a real estate agent in Florida, I'm going to tell you what I've been seeing lately. So we're getting a ton of sellers who want to sell. Great, awesome clients, listings. But no, there's a catch because majority of these sellers want us to sell their property for a value it's not worth. The numbers don't lie. The comps don't lie. If you want to overprice your property and shoot yourself in the foot, that's one thing. But we're realizing that it's not even worth taking the listing. Who cares? We don't need the listings to show we get listings, because when we get a listing and we market, we're dumping at least $500 per property to get it going, get the photography, get the videography. It costs money to play. So if we're spending all this money, say we have 5 sellers who want to list their house all overpriced, 5 times 500 is $2,500 that more than likely the houses aren't going to sell. Like, let's be honest. The sellers aren't going to accept a low ball offer is what they call it. But realistically, it's what the house is worth, but they're not going to accept it. So agents are spinning their wheels, dumping money into these properties to try and sell it when it's just a waste of time. It really is. And
Guys, this is like where we're at right now. And in the longer rates stay up, especially in the longer term, the more this gap is going to exist. And I think a lot of properties right now are very much overvalued. Pre-search said some real estate folks already say prices are coming back to reality. Yeah, if you look at Redfin trends, prices are coming down, but I still think they have further to go. There's still this gap. I think when you consider the fact that a lot of people's wealth is tied up in their real estate, and a lot of that, their real estate went up 40, 50, 60% over a 2-year period, following COVID. I think a lot of people had in their minds that this is like real estate's never going to go back down. And I think a lot of people are not willing to adjust their prices. And unfortunately, with where rates are, something's got to give. And I think we are due for a correction in the real estate market. And there's something like $50 trillion in like residential real estate, I believe. So, man, this could have an impact certainly on people's spending habits. If their perceived net worth all of a sudden drops significantly, I think we could see definitely repercussions from that in the overall economy. Okay, let's cover some other news here. Get rid of that one. Here we go. You all know about the Trump card that he announced. Essentially, it's like $5 million for citizenship. Obviously, they have background checks, etc. Apparently, they put this thing up on the website, saw 25,000 signups in the first 15 hours, $125 billion. Obviously, there's got to be background checks. Doesn't mean that all these people are going to come through with that, but that's pretty remarkable to have that many signups. We have to wait and see how many of those actually come through and come to fruition. But $125 billion is not a small amount of money. Again, I would expect that not all of that will end up happening, but we'll see how that plays out. In other news, NVIDIA said they're stop including China in its forecast because, as you all know, the U.S. has basically told them that they can't sell their best chips to China. Apparently, China is responsible for about a third of NVIDIA's overall revenue. So, what are we going to see here? I bet we start to see some major sales tick up in the likes of Vietnam and Thailand. Very much like what China does with our tariffs to circumvent them. They go through other countries. So I'm sure we'll start seeing some of that, but thought that was interesting. And lastly, we've got the protests. Things got a little bit hairy last night over, I think it was in Seattle, I believe. Now they were just like throwing freaking fireworks right on top of police officers. Wild stuff. Obviously, at nights when the crazy stuff happens, there's been a lot of mostly peaceful protests during the day. And then the big news of the day was not only removed, but arrested as well. And this is going to be all over the news, guys. Apparently he was just in there asking questions. I don't know. We'll see what the sides say about it, but not a great look. I'll say that much. Pretty wild to see a senator like that just in there asking questions, getting arrested in that way, in that manner. So, but yeah, get ready for that to be all over the news. So things are escalating. The big date to watch for, and then I'm going to get into the crypto news, guys. The big news to watch for is on Saturday, Trump's birthday. There are thousands of protests planned across the country. I could definitely see some escalations taking place there. So we'll see what type of events take place, but pretty exhausting, really. All right, let's talk about the crypto markets. Obviously, things are down. Ooh, man, Bitcoin's even fallen further down. We are seeing now below 105. It's been quite a drop off today. Again, I do believe a lot of this has to do with the tensions in the Middle East and what's going on there, and the fears of an attack on Iran and oil prices going up. And again, if we see this type of drop here, unless some good news emerges, I would imagine we'll likely see that trend hit the traditional stock market sooner than later. We have been seeing kind of Bitcoin lead the way and risk on assets lead the way, but when you look at the daily on the bubbles, it is ugly. We are bleeding. Obviously, we've had some good on the week, still very positive. Even on the year, hard to believe we're still positive, but yeah, man, rough day. Even this hour, a lot of liquidations, and a lot of that is that global news. That's why I cover that every day. Not to beat a dead horse. On the other end of things, though, Adam Back said that peak whole coiners is near. It's going to be super rare to have a full Bitcoin. You have to think there's something like 56 million millionaires in the world. There's only 21 million Bitcoin that will ever exist. And then you've got entities like BlackRock, like Michael Saylor with MicroStrategy, holding 5-10% of the total supply. By the way, this is kind of cool. See if I can find this picture. When I was in Vegas, I got to meet Adam Back himself. That's pretty cool. He actually has emails exchanged with Satoshi from the early days. So he is the OG Bitcoin guy. So it's pretty cool to get to meet him out in Vegas. Nice guy. All right. Let's see what we got here. We have Brazil is moving forward, pushing the country closer to having a Bitcoin reserve bill. I think we're going to see more and more of this with countries. It's crazy. Like all the stuff, a lot of these bills that are getting passed, people are like, how come we're not seeing the price action? It's like, well, they're getting passed. The accumulation will come after these bills are passed. We're seeing it with states. We're seeing it with countries. We're seeing it everywhere. Businesses, we're just getting started. So yes, not to say we won't have dips along the way, but y'all, we are still really early here. I think people are going to look back at these times when Bitcoin's sitting at 105,000 and be like, damn, why was I sleeping on Bitcoin? We're not, though. We're not. We know what's going on. Thought it was a fun fact. If Bitcoin closes above 119,000 for Q2, Strategy will post the largest quarterly earnings in human history, bigger than Apple and NVIDIA. That would be wild. And looking at the global M2 money supply, I wouldn't be surprised if after this correction, I don't know how much more of a correction we'll have. I wouldn't be surprised if we see things move back upward. But obviously the global macro and global tensions need to cooperate with that. We also have GameStop saying that they're going to raise another $1.75 billion to purchase more Bitcoin. Their trading after hours is not reacting very well to this news. So we'll have to keep an eye on GameStop and what happens in trading tomorrow. BlackRock has been, we talked about this now for the last couple of weeks, but Ethereum, guys, Ethereum is being purchased in BlackRock with a 570 million in accumulation over the last 2 weeks. Wow, that is pretty wild. Coin Bureau, he brings some awesome content, by the way. Coin Bureau talking about how the accumulation ETH ETF inflows have been rising for 3 straight weeks. Great time to DCA. I agree. A lot of people are thought that Ethereum was dead, but you got to remember, there's a lot of institutional interest in Ethereum. You have the ETFs there. You have a lot of people building on layer 2s. I don't think it's going anywhere, guys. I don't think it's going anywhere. Now, you could argue that not enough value rolls from the L2s onto the L1. I think there's an argument there to be made for sure, but I do believe the adoption is there regardless. So Ethereum, I think, has brighter times ahead, and I think that would bode really well for altcoins. By the way, speaking of catalysts for altcoins, the Genius Act has moved forward. If you remember, originally it was shot down. It is now proceeding to a vote. So that's very exciting stuff. This could bring in a lot of extra capital. And you're talking about catalysts that could help us with an alt season. Because here's the deal, let's be real. This has been an institutionally led market cycle. Bitcoin has been the big winner. Alts have not done very well. Historically, we've seen, Bitcoin holders were more retail, not institutional, and they were take their profits and move it into alts. So the question is where is the money going to come for alts? Because we are not in a full risk on time period right now with the way rates are, with the way the average American right now is really struggling with everything going on there, with the job market starting to move in the wrong direction, inflation, et cetera. There's a million things you could talk about there. So where's the money going to come from? The Stablecoin Bill Act, I think, could bring a lot of new money into the space. The other one I talked about yesterday which is the ETFs. And I think we could see a Solana spot ETF approved. And you gotta look at ways to bring in new capital, fresh capital into the markets. I think both of those could do that in a major way. Scott Besson talked about this, how the stable coins could lock in US dollar dominance. We've talked about that several times. For one, yes, you want to have dollars on chain so people around the world are using US dollar stable coins versus other currencies, but it also could help us finance our debt. I know we've talked about this a lot, but it's always worth mentioning, so I don't think many people realize what's happening here with the stablecoin bill is that the stablecoin issuers are going to be large treasury holders, and there's projecting that they could be the largest treasury holders or holders of our debt within the next 5 years. That's massive, especially when we have $9 trillion of debt rolling over the next 12 months. So who are the buyers going to be? I think this is going to help deregulation of our banks, allowing our banks to hold more treasuries. That's the other answer. That's coming next. Mark my words on that one. Besson's already starting to talk about it. I don't see Bitcoin holders selling Bitcoin to buy altcoins. Just too risky. A lot of people got burned last cycle with altcoins. Yeah, I agree with you. I don't think institutional buyers are. And I think we talked about this a little bit yesterday, that we're seeing a lot more long-term holders. We're not seeing, in prior market cycles, we saw a lot of people trading on leverage, trying to play the volatility and then move their Bitcoin holdings into altcoins. To your point, yeah, a lot of people did get burned in the last market cycle. And those are people that might not come back anytime soon, into the markets because they're looking at it as a casino. And frankly, up to this point, a lot of what's gone on in crypto has been a casino. You look at the NFTs last market cycle. When you look at the meme coins this market cycle, a lot of people got washed out. So I agree. I think more and more Bitcoin maxis are being made every day with what we're seeing with alts, especially the way they've underperformed. That said, if we do see a Solana spot ETF launched and seeing the money that's flowing into Ethereum right now, and I think if we see sectors like DePIN start to mature and show real revenue, I think we could see money flow into those types of alts. But I don't know that we're going to see the same type of alt season we saw back in 2020 and 2021 when people were locked inside because of COVID, handed checks and just had all this extra money because they couldn't spend money, otherwise, and had really the highest level of savings we've seen in a long time. And they were just bored looking for places to spend that money. Yeah, I don't know that we're going to see that, but I still remain very bullish on DePIN because I think that their actual business is being built by smart people. Let's talk about this here. So, breaking, the Bank of America, this came out today. Or was it yesterday? It says yesterday, late yesterday. Bank of America is reportedly launching their own stablecoin. There are some reports that I talked about a couple weeks ago that they're creating a joint stablecoin with other banks. And that sounds like they're creating their own stablecoin. Now, it does talk about that rumor. Last month, rumors surfaced of a potential collaboration with JP Morgan, though no partnership has materialized yet. Over the last few months, the crypto industry has received an unprecedented level of interest from traditional pillars of finance and government. But we were just talking about how this could bring a lot of money in. Now, this isn't the first time that the firm has teased such plans. In March, I don't know how to say his name, Moynihan, that's where we're going to go with, claimed that the Bank of America has no choice but to launch a stablecoin. I think this is a really important one to read. They have no choice but to launch a stablecoin. The previous month, he made non-committal favorable statements, but was generally opposed before this. So talk about a shift. And this is what we're going to see. But a lot of these banks were completely anti-stablecoin and crypto. In fact, I'll tell you what, I went out to set up bank accounts for my deployment businesses. I had to go to 6 banks to get a bank account. Chase wouldn't even let me, where I do most of my normal banking. This is completely shifting. So that's good to see. And that just shows that there's a lot of money sidelined that could be coming in. I think the Stablecoin Act is going to be instrumental in bringing new money into the space. Speaking of that, Shopify has now partnered with Coinbase and Stripe to roll out stablecoin payments. Check out this video using Stripe and Shopify. Look at that MetaMask there. Look at the payment options. Y'all, this is going to get pretty cool. Exciting stuff. Now, we can all talk about whether or not having all this centralization with stablecoins and involvement with governments and what that means as far as, is that getting too close to being a CBDC? It's a whole different subject. And I think that it's worth debating. But as far as bringing new money into the space, this is massive, guys. We're going to have all these banks creating stablecoins. Now you can use it. That's the big thing people are always talking about. Well, what do you do with your crypto? You can't use it for anything. Okay, well, go to Shopify and buy some shit. How about that? How about that? Also from Coinbase, they partnered with American Express. They have a credit card coming out that you can earn up to 4% back on your Bitcoin purchase. 4% back Bitcoin on your purchases. That's pretty huge. There's some other cards that do this already, but Coinbase getting in there. God, you know what? I'm not like a huge fan of Coinbase. I think that they're like, I don't know. I think they're so close to the government now, and I don't know that I trust them. Not to mention this bullshit that's happened recently with them, with their hack, and like not telling anyone until after they got their listing. That's crazy to me. And there's still people getting hacked on that. I've seen new posts every day. People that have been in the crypto forever that are still getting hacked. I'm like, God, don't you know that Coinbase got hacked? Guess they don't know. All right, let's look at some comments real quick before we get back into the other news. Money in Bitcoin ETFs won't buy altcoins. Yeah, you're right about that. That's what I'm saying. Like a lot of investment in these ETFs is not going to flow into alts. And I think that's what we've seen this market cycle. I miss my STEMI money. Hey, maybe we'll get some more. Although if we do, I don't know if that's a good thing. That means that maybe things are not so great. We need a BlackRock Growth DePIN ETF. Here they say DePIN ETF would be a bad idea. Too many crap projects could weed out the garbage projects. If that was done, there wouldn't be any projects left. All right. I wouldn't say that. I think there are some good projects in DePIN, guys. I do. Now, I think there's a lot of them that aren't. And I think even some of the good projects might not make it. You know, we got to see what happens with market conditions. And we're going to find out over time, like, what's the best way for, to have your token emissions set up? What's the best way to deal with Web 2 customers? The best way to do, should there be token burns early on in a project? There's a lot of questions that need to be answered. And we're pioneering that right now. But I think we will see some of the projects we're working with today that'll still be around in the future. Just know that these are like startups. And I've talked about this before, but like one of the things I find so exciting about DePIN is that as opposed to working for a startup and getting ownership in that one startup, you can have a full-time job and still get exposure to multiple startups at once in a sector that is projected to have massive growth. Now, are all of them going to hit? Probably not. But if you hit on some of them and they are very successful, that's all you really need. So it's about sifting out the bad projects, finding the good, solid teams that have a good use case and a path to revenue. That's the name of the game. There's no utility for the token. There's no project. 100%. 100% agree. You need to have revenue, and that revenue has to have some sort of value tied to the token. Absolutely agree with you. And I think we see too many projects where that's not the case. All right. Let's talk about some more money coming into the space, though. We have a NASDAQ company that is investing $500 million in Fetch AI. Still have a little bit of Fetch. I think I sold a lot of it when it was up. They did some weird stuff where they combined with a bunch of other projects. I don't know. But that's a pretty sizable investment from a NASDAQ company. Obviously, they're doing something right. That said, the market still didn't care. this is what we're seeing right now. People are so risk off and so scared right now that even it doesn't matter what the news is, stuff's getting destroyed. You know, in a bull run, that type of news, like last market cycle, that type of news, you would have seen FET like up 100% on that news. You're not seeing it right now. I think we'll get back to that point though, where we start to see those types of moves, but it's been a long time. I was thinking about this actually. You remember that the market peaked back in December. It's been 6 months, y'all, since we've been on this like slow bleed down. Some days we're not so slow, but it has been 6 months. This has been painful for sure, but we're still here. You know, we're looking at the big picture, guys. And one other thing before I move into the DePIN news, this guy, I don't know if you guys saw this, Ara, they had like a community takeover from some PE firm. This guy sold $8,500 worth of his tokens 8 days ago. Had he held an extra week, it would have been $1.3 million. Talk about losing some sleep at night. Whew, that is pretty brutal. Yeah, that would suck. I've had not quite that much, but I've had some other bad beats for sure over the last year. But you know, you take them. You win some, you lose some. That's a big one, though. That is a big one. The only risk when we take GeoNet and Rover, y'all, those are two really good projects. You know, I've talked about GeoNet at length. I've talked about Rover a lot recently too, and they're both working together. They have Mike Horton helping out Rover as well. I think both will do really well. I really do. All right, let's talk about DePIN. By the way, guys, in 40 minutes, I'm going on the DePIN happy hour tonight. Make sure you tune in if you haven't yet. Bunch of great group of guys, all very involved in the DePIN space, all bring value in different ways. So definitely hop on there. Papa Mike, guys, that's Mike Horton. In case you didn't know, Papa Mike, anything he touches turns to gold. That's what I've heard. I don't know. It's what I've heard. I think it's true. I like literally, he's Wingbits and Rover. He's involved in both. He has a vested interest in both. And Mike Horton has proven himself to be very, very capable in this space. How about this? How about DePIN? It's a little bit misleading. It says DePIN leads the 24-hour mindshare. It's not exactly true. It led in the percentage gain in mindshare, though. So that's huge. A 10x in mindshare gain. So obviously, people are paying more attention to DePIN. Masari noticed. Masari also noticed Helium. Helium had 138% growth quarter over quarter on their offloaded data. So, guys, usage is increasing in a big way for Helium. Masari highlighted it, and the price is still getting wrecked. The trend of the day, guys. Once the market turns around and people get risk on again, all these catalysts, all this stuff we're covering every day, while it's not affecting price now, the price will catch up, in my opinion. Another good example of that is Hivemapper. Guys, I talked about this yesterday. They said they had a Fortune 50 customer, and then 24 hours later, a Fortune 20 global company is going to be buying data from them. There's some other announcements too, some other clients, smaller, but nonetheless, pretty wild. And then when you look at New York, so by the way, these honey bursts are companies that are entities, people, whatever, paying for these bursts to incentivize people to go and collect imagery there. They get extra honey for doing so, but that means they're looking for that imagery. They're willing to pay for it up front. Kind of a cool aspect of a DePIN project like this, that you can pay to incentivize people to get the data you need, matching supply and demand. Look at this in New York. That is wild. That's a lot of bursts. So somebody's interested in imagery there. We are seeing the true utility spike, but the price, not so good. Still, we were at like 3 cents yesterday, back down to 2.5 cents. This type of news again. If we'd had this in the midst of the market, when the market was up, a little bit over a year ago, probably would have seen 50, 60% pump. Just not seeing it happen right now. But again, I think it will come. All right, let's talk about Demo. Somebody had a joke earlier about subscriptions. I believe, what do you say? Maybe the airlines will start charging a subscription for the privilege of choosing your seat. I believe that was a dig at Demo. Demo recently announced they're charging subscriptions for connectivity. They had a big announcement today, though, with this entity out of Japan. And before I get into that, speaking of subscriptions, guys, this is pretty wild. Guess who definitely paid for their subscription to Babbel? Rob, co-founder, did. I thought this was AI generated. Watch this guy. Apparently, he speaks fluent Japanese.
こんにちは。私の名前は Rob です。私は DEMO の共同創設者です。DEMO は新しいコアインターネットプロトコルです。私たちは AI、ロボティクス、自動運転、高速ワイヤレス、スマートシティ、IoT、コンピュートなど、現在進行中のテクノロジー革命において重要な
Like, what? I was like, that is crazy. But yeah, man. Definitely. I don't know. Maybe he uses Babbel. He uses Duolingo. I don't know. He's paying for that subscription, I bet. All right, let's see here. What we got? Let's pull up this article. We've got, I think I marked some highlights in here. So Japan, Demo has a joint venture with this company out of Japan. Their connected vehicle market is projected to hit $1 trillion by 2030. So it's obviously primed for this type of collaboration. They're talking about Demo. And I think this is the big reset we're talking about with the subscription service, is that they're trying to really drive home the point of the network. Drivers connect their vehicle through Demo's mobile app and earn tokens. We all know about this. Creating a two-sided marketplace. And this is something I think we need to realize about Demos. It's very different than a lot of other projects. A lot of them, you're building out the infrastructure. On the other end, they have a different customer. Here, you're connecting your vehicle, so you're participating in that sense, but you're also utilizing the apps. So you're kind of participating in both sides of the marketplace. Japan produces approximately 10% of the world's vehicles. So they're saying, meanwhile, the connected and software-defined vehicle market is projected to expand from 200 billion to over $1 trillion by 2030. So I guess this has to be voted on, by the way, because they have decentralized governance. So part of this is that the community is going to decide whether they should allocate $500,000 and 4 million tokens for a 33% stake in this Japanese entity. This is the question. Japan is going to pay $9 a month. And actually, what I want to talk about here. We'll pull this up. So that's the big question here, guys. Like I talked about this yesterday. 182,000 vehicles connected to the network. That number is meaningless, honestly. What matters is how many of them are connecting to applications. Okay, so the big things, developers are building applications. Look at the amount of developer licenses coming on board, and you see all these people are starting to build. And a lot of this growth in developers really happened over the last few months. So we should, in theory, start to see a lot more applications launched. But what really matters is this number right here, which is the average number of apps connected per vehicle. Now, keep in mind, everyone starts at 1 because you have to download the Demo app to connect your vehicle. That does not generate revenue. Okay. Every app that's connected in addition to the Demo app generates $1.25 per vehicle per app per month. But if you look at the number here, 1.29, that means that only 29% of these 182,000 vehicles are bringing revenue into the protocol. So times 29%. So roughly 52,000 of those cars, assuming they all connected to one app, some are probably connecting to multiple apps, so even less. That there's a huge percentage. Let's just call it, 70% to 75% of these vehicles, these 182,000 vehicles, never connected to an additional app at all. They literally connected the Demo app. They're mining tokens. They're likely selling them every time they get them every Monday. driving down the price. But that's not it, guys. The other part of that is Demo has been paying for all the connectivity. So not only are they not generating revenue and any value for the project, but let's say they are paying $10. Oh no. Israel just sent missiles in Iran. That's not good. Not good. That's some breaking news for you guys. I haven't fact checked it, but I assume that those are accurate reports or accurate statement there. That's not good. But that's exactly what they're trying to do, because let's say that 182,000 vehicles, and keep in mind they have LTE connections, and let's say they're paying, let's just say $7 a month for those connections. That means they're burning through over $1.2 million a month paying for the connectivity of these vehicles. And only, say, 25% of those are actually generating revenue. The other 75% are really just sucking not only cash flow from Demo, but token rewards as well, and creating downward selling pressure on the token. So I think what Demo is looking to do is like, hey, have this reset. Now, and this is the question. Can they replace the vehicles that are going to be dropped off the network fast enough? Well, this thing with Kaufman in Latin America, getting their devices on Amazon. Okay, Rob talked about that in our space. This type of thing with Japan, this could replace. And really, let's be real. Let's look at the revenue that's generated. Only 25%, of those cars were generating revenue. So let's say that 75% drop off. That's not necessarily a bad thing for Demo. It doesn't change the amount of revenue they're generating. It helps preserve their cash flow, and that they continue to add more vehicles that are going to actually use the application. And think about it, these dealerships, these partnerships, they know they're going to be paying $9 a month. That has to be part of their discussions, or maybe they're giving them some sort of a discount for having a bulk purchase. But if you start doing the math here, then why would, here's the question, then why would Demo sell so many devices to begin with? Well, it's a good question. I think early on, I believe in the early stages of Demo, they were looking at doing more of monetizing data. And I think over time they realized, hey, there's much bigger potential here if we can kind of be like the app store for vehicles, like kind of what Apple has done, right? And I think over time they were like, we are kind of missing the boat. We need to create this ecosystem where the main revenue generation is through apps. And that's why they passed that improvement proposal that you have $1.25 paid revenue coming in for every time a vehicle connects to an app per month. Now, I think we served a purpose, by connecting more vehicles. You see 180,000 vehicles connected. I think it drove developers into the ecosystem. You see it. We have over 400 devs building applications. That's a win. But they needed to pivot. And it sucks. I think, for people like me, or, people watching that built a fleet with autopies, it kind of sucks for us. Like, I think the token, could actually do well in the future, and I'm going to explain why here in a minute. But I don't think it makes sense for us necessarily to be paying $9 a month if we have a huge fleet per vehicle to keep them connected. And actually, I don't know how much value my fleet adds to the Demo network anyway. I don't know how many of my hosts are really using the applications. I think, I said, hey, I'm going to plug this into your car. You're going to make some tokens. We'll see where this goes. So I get it. I get what they're doing. It sucks, but it's all about adding value to the network. Now, again, right now we have 25,000 vehicles adding revenue to the network. How much revenue have we generated? $536,000 in revenue. I mean, that's not a small amount, and that just started this year. But let's just do some simple, back of the napkin math here. Let's say that they have this Kaufman situation down in Latin America. They have Japan. They have Amazon. Let's just say they do get to 200,000 vehicles connected, which I don't think is unreasonable, okay? And let's say that each of them connects to 2 apps, because these are now people that actually care about, about the protocol and the actual use case. That would be $500,000 a month in revenue generation. Okay, so $6 million in annual revenue for the project. Like, is that a huge amount? No, that's with 200,000 vehicles using 2 apps each. If they start adding more useful applications, start adding more vehicles with these partnerships, I think there's a route to where DMO could be generating a lot of revenue. So I think in that case, the token could do well. That doesn't mean that I think it makes sense for us to build large fleets at this point, right? I actually I'd argue that it probably doesn't. But I think looking at the token as an investment may be not a bad move, not financial advice, but especially if we see it get beaten down anymore, I think there is still a promising future if they can pivot and do it in a successful way. I think the math works. All right. I don't know what you guys think. He said, if DMO can pull this off, they will be the biggest DePIN in the market in the next 12 months. I think you're right, man. I think it's possible. And that's where people are really getting caught up on, well, I'm not going to pay my subscription fee and this project's a failure now. It's like, no, they're getting rid of the contributors that weren't doing shit for the project anyway. And they're still working hard behind the scenes, getting a lot of these are big partnerships they're announcing. And these are going to be revenue generating partnerships. So I 100% agree. So for me, I'm still interested. I'm still holding a lot of the token. I'm still looking at it as a solid investment. I'm not looking at it as something that I'm necessarily looking to, or something that I would tell people to go out and build a fleet with at this point. But I do like the project. Okay, let's talk about AO, the computer. I haven't talked about Arweave ecosystem in a while, but guys, AO is basically a smart computer built on Arweave. Arweave, my favorite storage project by far, hands down, not even close. They do permanent storage. They've got something like 20-something blockchains storing all their data on Arweave. They also have something like 85% of Solana NFT collections stored on Arweave. The amount of usage is getting is massive, and AO is starting to see more volume tick up. We look at Arweave right now, sitting at $6.40. This is one that I'm a pretty large holder of, and one that I'm continuing to DCA into. A really big believer in this project, sitting at $420 million market cap. I've showed this before, but man, the last market cycle got up to $76. So over a 10x from here is where we got back to that. One thing to point out though is that the circulating supply is pretty much completely out there, so you don't have to worry about dilution like you do with a lot of these other projects. It's one of the bigger problems I had with Filecoin, because they had so many new tokens come into circulation since the last market cycle. Arweave is quite different. We look at AO, sitting at about $20. By the way, I have a tutorial on how to bridge Arweave over and buy AO. But I really, really like this project, guys. $67 million market cap. If you look at other projects that you kind of equate it to, 1.3 billion, 1.23 billion for internet computer. And we're talking about what, 67 million was it? 64 million. I'll just drop. Who's watching and sold while I'm talking about this? Come on, guys. Just kidding. Yeah, guys, that would be, what is the math on that? Let's just do some quick math. 1.3 by 65. 20x, is that right? Yeah, about 20x. I think AO has a bright future. And we're very early in this, so this is one that I have holdings in as well. I see Unleashing in here. Let's go, buddy. Hey, 20 minutes till DePIN happy hour. I'm going to be on there, guys. Everyone should jump over to that as well. We're going to have a great discussion. A lot to talk about there. All right. I don't know if you can share the link, Tyler, in there for everyone, or if you tweet it. I will certainly pull it up. 375 AI just put out this video. Huge fan of what they're doing. Man, watch that interview I just did with Harry. You guys will, once you watch that, you're going to be super bullish on this project. Like, they are doing massive things. And he is one of the more, I don't know, I guess his work history is super, super impressive. One of the more accomplished people I've done an interview with, and he's like 39. Remarkable stuff. But they're setting up these cameras on billboards all over the country with NVIDIA chips, tracking vehicle data. A lot of people interested in this data, including hedge funds. Hedge funds love all the data they can get. I think 70% of commerce is still done offline. This gives a lot of new insights into data that we didn't have before. So huge. I think they're going to be massive. And Q3 TGE on that, by the way. All right. I think I had a couple other fun articles to end things off with today. Thank you all for joining, by the way. I know I'm on a little bit later than normal, but maybe this works out better for some people. It's after work. Don't forget to like and share and follow me on YouTube if you have not already. Let's take a look at this. Check out the new Tesla Cyber Cab. Pretty fresh. We're going to be riding in these things before you know it. I've seen a couple other videos of it, but they've also had their autonomous vehicles being tested in Austin, Texas right now. So we are very, very close. Imagine getting in this thing. No one driving. We're going to see a lot less vehicle ownership in the coming years. People are just going to be hopping in these bad boys. And think about the costs are going to be able to be driven down without the labor included as well. Those wheels, they said those wheels are hideous. I don't think they look too bad, but I can see why a lot of people wouldn't like them. I think they do show a little bit more of the interior here. No steering wheel at all. That is nuts. Pretty crazy. Yeah, the wheels are a little bit weird, huh? Man, robo-taxis are it's gonna be such a massive industry. I talked about this a little bit yesterday, though. It's gonna crush the gig economy. We're talking about AI, man. It's gonna hit us in so many different ways in employment. Man. Think about the Uber and Lyft jobs going away. Like that's really catapulted or like kind of held up our job market quite a bit. But yeah, man, job market's gonna get hit in a lot of different ways, but especially with the robo taxis. Massive opportunity though, and I think that's a big reason why I think Tesla stock could do really well in the future. Massive opportunity for them to tap into. It's also a big reason why projects like GeoNet, getting that RTK capability is going to be really big. Rover with HD mapping is going to be really important for robotaxis and autonomous vehicles. All of this is interconnected, guys. We are on the cutting edge of a lot of this stuff. It's super exciting. What will the ownership models look like? Tesla can own all forever. Yeah, that's a good question. If they'll put them out for traditional owners, or if they'll have a different model, if these are only their own fleet. I don't know. I haven't read into that enough. And lastly, we'll end with this. Bonnie Blue. You guys probably heard of her. She got kicked off OnlyFans, guys. And it's not for what you'd think. They, she was doing, let's see, she didn't get kicked off for sleeping with 1,000 men in a day. She also didn't get kicked off for sleeping with a bunch of, having a competition with a bunch of college students. But there's this most recent one. She's going to have a Bonnie Blue's petting zoo. She was going to be tied up in a box and have participants do whatever they wanted to her. And they're like, nope, that's too far. Guys, she said she was making $689,000 a month. Oh, that is nuts. Nutty stuff out there, man. Crazy world we live in. Look, I have to see what's going on with this Iran situation. Yep. Israeli official confirms attacks targeted Iran's nuclear sites. Yeah. That's not good for markets. Get ready to see oil prices spike up. We could have some rough times. hopefully this doesn't escalate too much. But there were reports earlier that said, you know, if Iran's attack, they're going to retaliate. So this could escalate pretty quickly. We'll talk about it tomorrow afternoon, I'm sure. We'll have plenty to talk about. But guys, make sure to head over to the DePIN Happy Hour. We're going to be kicking that off in 15 minutes. I'm going to hop off here, though, so that I can grab some water, get ready for that, because we're going to be on there for a while. I'm going to make a drink, too. Hell yeah. Appreciate you guys. I'll be back tomorrow afternoon. Peace.